So good afternoon, everyone, and welcome to today's session. For those of you that do attend these sessions on a regular basis, you'll probably be familiar with who I am, but for those that don't necessarily come along as often, allow me to introduce myself. I'm Manveen. I'm the Learning and Development Manager here at the MGAA. I'm delighted to welcome you to today's session, hosted and supported by Diesta. Before we do hand over and get the session up and running, just a few housekeeping points. You'll notice that your microphones and cameras aren't enabled at the moment. And that's purely just to minimise disruption and stretching the bandwidth for the session. We will enable them as necessary during the Q&A piece. And we do encourage you to ask questions throughout. So if you do have them, you've got the option of the chat function, but we will have a main Q&A section at the end. So please feel free to save your questions there also. We are recording today's session and we will share this afterwards with all those that attended, as well as hosting on our on-demand page. We do ask that you don't use any AI note-taking devices or supporting softwares. We don't have permission to use this. So if we do see any of those enabled, we may have to remove them. We will also have a feedback survey towards the end of the session. We should take no longer than a minute, but we do always value your feedback on these sessions. And then finally, these are accredited by the CII for their contents. If you feel this meets your learning needs, feel free to add it to your CPD log. So without further ado, I'm more than happy to hand over to Toby from Diesta, who's going to introduce himself and the rest of his colleagues to get our session started today.
Perfect. Thank you so much, Manveen. And yeah, welcome to the Diesta Best Practice Financial Frameworks. Good afternoon, everyone. Thank you for joining us today. Like I said, I do want to just extend a thank to the MGA for hosting us this afternoon and for letting us to speak with you all. Really do appreciate you taking some time out of your busy days. As Manveen mentioned, it will be recorded and you'll get a copy after this, but do feel free to reach out to us directly if you do want to just continue the conversation with anything that we've discussed today. And also, as was discussed, please do drop any questions in the chat. If it's relevant, Piers, Manveen will pick that up at the time, but yeah, we'll definitely look to address all of those during the Q&A. So for those of you who aren't familiar with me or have not met me before, my name's Toby Willits. I'll be one of the hosts today. I'm the Sales and Solutions Manager at Diesta, where I spend a lot of my time speaking with MGAs about their ambitions, for scaling their businesses, and really for improving their financial operations. Prior to Diesta, I spent about 4 years, I think, as a management consultant at Capgemini, where I was within their banking, capital markets practice, with a little bit of time also in their insurance practice, working on large-scale payment and reconciliation transformation programs. I'm also joined on the call today by Piers Williams.
Hello, thank you very much, Toby, and thank you everyone for joining us today. My name's Piers Williams. I'm the Chief Revenue Officer at Diesta. I started my journey in the insurance industry a number of years back, working in the broking space, where at the time I didn't realise, but was doing a lot of manual finance and payment operations processes. Could be very frustrating at times, very labour intensive. And for the past 10 or so years, I've been working on the technology side of the market, helping organisations from across the global insurance ecosystem automate and really change the way that they complete these finance and payment operations processes. So really excited to hopefully share some valuable insights around what I've learned, what I've seen in the industry over that time.
And for some of you who may not be so familiar with Diesta, just as a brief introduction to ourselves, we are a finance and payments platform built specifically for the intermediated insurance industry across the insurance value chain, so across brokers, MGAs, and insurers. But really our focus today and on the session is really about helping MGAs streamline their financial operations, particularly when it comes to payments, reconciliation, accounting, and also reporting operations. And I guess one of the key advantages that we have with Diesta is that every day we're speaking with new MGAs, and through those conversations are getting a really good view on how different organizations are operating today. We're seeing not only the challenges that they're facing, but also the ambitions that they all have to be more efficient and to be more scalable, and with that are looking to transform their processes today. With that, we are also seeing clear patterns starting to emerge really across the global MGA market. And with that, we're taking away insights into what's working well, where is friction existing, where are new challenges starting to crop up, but also how can we transform those into process improvements. And our goal with Diesta is really to take those insights and embed them into the platform so that our clients can operate with what we class as a best-in-class financial framework. And that means supporting not only how MGAs want to operate operationally, but also ensuring that they're strengthening their governance, their controls, and their compliance, which is really a key piece in such a highly regulated industry. Now, with that, I suppose the real purpose of today's session is to share some of those insights that we've gathered more broadly with the audience today. So we're going to cover some of the realities that a lot of the MGAs are facing today, and no doubt that some of you that are operating in the same space will always also be experiencing. But we also want to take that and show you what we think best practice can look like from a finance and a payments operations perspective, and how some of those challenges can actually be addressed in the industry. I'm going to pass briefly over to Piers now, who's just going to set the scene for the learning objectives today.
Thank you very much, Toby. And yeah, we've really thought through how best can we cover today's topic, which is all things finance, payments for MGAs. And to start things off, we're going to start with the basics. So explain what the core financial responsibilities for an MGA are. What are the absolute imperatives that the organization must complete to support their role within the insurance ecosystem, and their role in distributing insurance products, obviously focused on that financial side. As Toby mentioned, we're speaking with dozens of different MGAs, from the largest players, small startup players, really everything in between, on a week in, week out basis. And we have a very consistent theme of challenges that we're commonly hearing. Maybe you'll be able to resonate with those. Perhaps you're sitting in perhaps a sunnier position where you've got a really slick operating environment already. But either way, hopefully we'll be able to share some insights that will resonate with you, and where you maybe have got some challenges today, also look at some potential solutions. We also do pride ourselves on looking to set the standard when it comes to a best practice framework for all things finance and payments operations in insurance, obviously specifically today looking at the MGA subsector. We work with lots of leading consultancy firms. We get to see what works well, what doesn't work well on a day-to-day basis on the ground within MGAs. And we really want to take what we've learned from all of those different inputs and share that to you in a view of what best practice would look like. And then finally, don't just listen to us in terms of what best practice looks like. We're also going to look at some stories from some organizations that are already benefiting from a highly automated financial control framework within the MGA space. So not only looking at what you need to do, any challenges that you might be faced with, and what potential best practice looks like, but actually looking at some organizations on the other side of that who are already in a really strong position to move forwards. But let's start with that first point. And what is the core financial responsibility for an MGA? And let's take a step back before we go into that and look at things from the ground up. So we've got this fantastic stat in the top left here from MasterCard, and every £1 of premium drives £7 in payment flows in the insurance industry. Now, let's just explain what we mean by that a little bit, because on the surface may seem a little bit of an odd statistic. So if we look down, you can see there we've got a insurance distribution chain, a pretty standard one, starting with the insured on the left, going to a carrier on the right. And we've got various different handoff processes. Firstly, between the insured and the broker. The next one between the broker and the MGA, and then the final one between the the MGA and the carrier. And in between each of those, you'll see a little multicolored line. And that multicolored line represents one of those payment flows. Now, I'm sure we can all think of a more convoluted distribution chain that maybe has some reinsurers sitting to the right of this diagram. Maybe you might also have an MGU, or even a wholesale broker, a binder broker, or even perhaps some other intermediaries sitting downstream as part of that distribution. And you can quickly understand why every £1 of premium has £7 of payment flows. So it moves 7 times before it ends up with the final entity at the end of that distribution chain. And that's how we go from 1.7 trillion pounds of GWP and multiply that up to 10 trillion pounds of payment volumes annually within the insurance market. So the lifeblood of insurance is moving that money within the organization, and we've all got to do and move a huge amount of money as part of that. So let's now, talk a little bit more specifically around the MGA. The MGA's job is, yes, to distribute insurance policies, or if you can flick back for me, Toby, is yes to distribute insurance policies, but secondly to that is to move money effectively within the insurance industry. Now, that might be by processing payments from their brokers or direct from the insured, or it might come to them paying on funds to the carrier, capacity provider, insurer, reinsurer, whoever sits on the settlement side. For them to enable or to effectively move money within the insurance industry, they have to be able to move money within their organization. So that's not only collection, but that's through to payout. And let's dive into that in a little bit more detail now. What are the absolute core elements that enable an MGA to move that funds or move those funds across their organization to fulfill that wider role that they have within the insurance distribution chain? Looking at the top left, the first one is premium collection and reporting. And this really comes down to the accurate matching at a transactional level of all payments that are coming into the business. That also applies to different payment types. Again, thinking about broker distribution, we will likely have bulk net settlements, installments, but again, on that insured model or direct to insured model, there might be payment providers or even premium finance. But ultimately, that is the first discipline that you've got to master, the ability to take those payments and accurately match and reconcile those against your internal books and records. Ultimately, looking at that third bullet point, ensuring the MGA gets paid. I mean, what could be more important for argument's sake? Once you've been able to accurately process the payments that have been received, the next step is credit control. This is very much an absolute core discipline when it comes to ensuring that the MGA gets paid. And the organization needs to both manage this on a policy transactional level, but also on a partner debtor level as well. So each transaction, you need to understand when it is due and not due for payment so that you can effectively chase that with your partners, whilst also considering your partners at a more aggregated level, looking at those perhaps with the largest outstanding balance of debtors items to the smallest. And that then feeds into that aging. So being able to understand when something's due, when something's not due, and then to escalate the older that item gets. We also always encourage that there needs to be a proactive engagement with your partners. So if you can proactively send them accurate information in the form of statements, you're going to make your job and their job far easier when it comes to ensuring those payments and settlements are made accurately and they're made on time. So there's an element there of your internal discipline from a good data quality and reporting perspective, being proactive in how you approach those partners, but also making sure you're doing that with accurate and correct information. If we look then beyond the collection and accurate processing of payments from a credit control perspective, the next job is to account for all of those activities. And that is the accurate accounting for every transaction and the underlying splits. So from an MGA perspective, you might receive a premium payment for £1,000, let's say. Now that £1,000 actually has multiple underlying splits that sit within it. There could be a commission of say £100 that the MGA will earn as part of its distribution activities. There's likely to be a premium portion and a tax portion that needs to be paid on to the next party in the chain. And that can be further complicated because there might be multiple premium splits and multiple tax splits. Which brings us on to the next point. Effective management of your debtors and creditors positions. So it's all good accounting for both the transactional and the split level, and that really is going to feed into that effective management of your debtors and your creditors from an accounting perspective. From an IBA, financial operations perspective, within an insurance intermediary such as an MGA, these are really the lifeblood of your organization and very much feed into your cash flow and various other key elements. Once you've actually done that bookkeeping, it's vital to ensure you have alignment right across your operating landscape. So that might be with your policy admin or your underwriting workbench platform, right through to your general ledger and the accurate posting of journals and other such reports into your management accounts so that you get a holistic view across the finance landscape. Also handling perhaps those less standardized type transactions like write-offs, which are, I guess, something that just happens, and there's those various different types of ad hoc requirements, write-offs and other types that you might need to deal with within that. Again, all of this, good bookkeeping, accurate management of your debtors and creditors, alignment of your systems, handling of those ad hoc transactions will feed through to accurate management reporting, enabling the senior leaders within your organization to have confidence in the reporting that's being provided and for them to make informed strategic decisions. And then the last aspect of the operational side is the payout and bordereau generation. Within an MGA, you need to ensure that you accurately calculate your partner payouts. Now, payouts might be the MGA settling its own commission and earning its own revenue. It could be paying a premium and a tax over to the carrier or the insurer. It might be paying an introducer commission out to an introducing organization. It is absolutely vital that these are accurate. Not only that those bulk payouts are accurate, but that you can underpin that information with accurate supporting documentation. Now that might be in the form of a paid bordereau or a remittance that you are going to send to the respective partner alongside that payout. And having both accuracy across that payout total that's moving and that underlying supporting information is going to improve your relationships with your partners, because you're hopefully going to make it very, very easy for them to process your payments, the same way that you would hope that your distributing partners will look to make it as easy as possible for yourselves to process those inbound payments. And then I think the final point here is perhaps the most important. So within the UK, we work on a pay-as-paid basis. So if we circle back round to step one, as soon as you get paid, the clock starts ticking and you must ensure that you are meeting your credit obligations when it comes to your different credit terms that you have with a settlement. As soon as you get paid, you then very much are on the clock to accurately and effectively pay those funds over to your partners in line with those credit terms. So hopefully there we've talked around the kind of 4 key disciplines that we see as a high level, from managing those inbound payments and processing them, chasing any payments that are outstanding, accurately accounting for those, through to paying out those funds and providing reports to your clients. There are also some perhaps less tangible, non-operational processes, which we've got on the right-hand box there, which are just as important. And that feeds into that control and auditability point. You need to ensure your auditors are satisfied and your regulatory obligations are delivered. So within all of these processes, there might be certain things that your auditors want you to do or want to see as part of that process. Likewise on the regulatory side. So you need to bear that in mind, that you're also, whilst doing your day-to-day operations, you're thinking about these external parties and making sure that you're appropriately documenting and meeting the requirements that they will have. Not only that, you need to ensure you're enforcing any internal controls and governance that might be passed down from senior management. This could be around segregation of duties, having clearly defined permissions frameworks as to who can do what and why they can do what. And that actually feeds in to the last point, which is clearly evidencing where you have got those either external controls that your auditors and regulators are advising that you put in place, alongside those internal controls, clearly evidencing those and making sure that you're documenting those periodically so that you can demonstrate those as and when you have a request to review them. So hopefully there we've covered what is the core financial responsibility of an MGA within the insurance industry and their role in moving money within the industry, but also what is the role of the MGA in terms of moving money effectively through their organization. Now, what we've covered there might seem really nice and very straightforward on the surface, but I don't think that's necessarily true when we look at the lower level detail. And I'm going to hand back to Toby now, who's going to go through some of the challenges that we see day in, day out, dealing with MGAs in the market.
Absolutely. And yeah, before we can even touch on what those solutions may be, we absolutely think it's worth taking a step back and looking at the reality that many MGA operational teams are dealing with today. And in the top left there, we think it really starts with manual disconnected workflows, where key processes are spread across spreadsheets, emails, and more often than not, systems that today just simply aren't talking to each other. This is going to create silos, and it ultimately forces teams into doing constant rekeying, which not only is going to slow things down, but it also starts to introduce avoidable errors, and something that we've seen creep in, and a challenge that is flagged far too often at the moment. And ultimately, once those workflows are set up like that, I think it naturally then leads into the next challenge, which is those fragmented receipt allocations, where you do have money arriving into different bank accounts, often in different currencies. And if you are working with that direct to insured model with different payment providers or premium finance houses, matching that accurately then becomes much harder. The reconciliation process slows down, and that visibility then starts to suffer as a result of that. That lack of clarity is feeding then what is already a complex and manual payout process for MGAs. As Piers alluded to, a payment is comprising of multiple different splits that need to be calculated and managed effectively. And without that clean, structured input, what we see is teams often calculating payments offline, relying on spreadsheets and manual checks to ensure that payments are made correct. And that increases those risk of errors. And what we've seen is payments being duplicated, or often just incorrect payments being made, which can be embarrassing for the MGA, but also can make it much harder to stay aligned with those contractual terms that you have with your insurers. And that's compounded when we see these arrangements becoming much more complicated and much more sophisticated. Now, at the point of this, I think a bigger issue starts to emerge, and it's a point that many MGAs strive towards, which is scale. Everyone wants to increase their premium, they want to bring new products on, but the processes that we see today just they're simply not built for this. What might work for a startup MGA that we speak with small volumes is quickly going to become a bottleneck as that business grows, whether that's through increased premiums, if it's through new distribution partners or insurers, or if it's just through bringing on new products. And as that scale does increase, so does the need for control. But more often than not, the control and the auditability is left behind. Controls remain weak, and audit trails are limited, and in some cases are just non-existent. And I think without a clear system of record as to what's happening and why it's happened, it can become really difficult to not only evidence decisions and track changes, but also to resolve any issues that may arise with confidence. Now, that lack of structure often goes in hand with inconsistent approvals and unclear ownership, which leads to that reduced accountability. When responsibility is spread across these teams, without that clear governance, the decision process slows down, the right people aren't included in the decisions that need to be made, and the risk of oversight is also dramatically increased, which is a dangerous thing to have in such a regulated environment such as insurance. Now, underpinning all of this, and something that unfortunately insurance is plagued with, is the challenge of inconsistent data. Every intermediary has their own format of bordereau, their own remittance, their own statement format, and they're all structured slightly different. A key challenge that we see crop up a lot is that there is such a large-scale additional effort in firstly understanding what's on these statements, what they're trying to make out, and it then makes standardization almost impossible across those receivables. And all of these tend to then surface into the same place, which is unallocated cash and delayed reconciliation. And unfortunately, when money does sit unmatched and that visibility is reduced, the finance teams lose confidence in the true cash positions of the business, which can lead to downstream decisions and strategic decisions from executive teams being slightly blurred by what the actual truth is. So while on the screen, these all appear to be separate challenges, at Diesta, we actually think they're all quite deeply connected. One of these issues is going to create the conditions for the next, and over time, they're going to compound into not only slower operations and increased risk, but also really limit the ability for you to scale. And over the last couple of months, at least, speaking with some quite renowned MGAs, some startup MGAs that are worried, we've seen this play time in, time out, where MGAs lose control of their finance operations. And once you do lose control of it, once that unallocated cash and aged debt does become quite large, it can be difficult to recover from that. And I know, Piers, you've seen a lot of this firsthand during your time. It'd be great to get some of your thoughts on some of these challenges. Is it consistent with the partners and clients that you're speaking with?
No, absolutely. I think if I look at it more in the round, there's been a big underinvestment in a lot of these areas historically, and when we're speaking with people responsible for managing finance, payments, IBA teams within MGAs, we get a consistent message, which is their processes are manual and fragmented overall, using a combination of Excel, elements of systems, and it's very difficult for them to get any kind of view or position in anything close to kind of real time as to where exactly they're at across some of those core disciplines of their debtors, their creditors, etc. There's always a bit of a time delay, and it's really because perhaps they haven't got the right tooling, or the right tooling has not been available to support them, because on a monthly basis they will be dealing with hundreds of distributing partners and potentially hundreds of carriers and insurer partners, maybe slightly less on that side, but there's a lot of moving parts. Each of these organizations is exchanging information and data with them. They've got internal systems as well to bring into that. So it's very, very difficult for them just to manage all of that information before even doing the actual, processing of that on a day-to-day basis, from, that payment that's coming in, that accounting, or paying out those funds. You can think of all the different payment types they're getting, all of the different kind of nuances that no doubt you'll be familiar with that crop up in the insurance space. And actually, again, the overall operating process of how an organization receives funds, accounts for them, and pays them out in the MGA space is also pretty siloed and disconnected. And really what organizations are looking for is a single workflow from where the money lands right through to updating with their internal systems on any matching and allocations, updating their general ledger with the accounting, through to paying out, calculating what they need to pay out, and even integrating directly in the bank and initiating that out. That's what they're really looking for, and is really their nirvana. But they're really not there yet, due to just not having the correct tooling. And I think, Toby, you're probably going to now look at, well, what does the other side of some of these challenges look like, and what is perhaps the art of the possible in terms of sort of an ultimate state that an MGA could be in.
Absolutely. And I think to that point of manual workflows being done in Excel on Outlook, a stat that we were provided not too long ago is for those standard MGAs, 60 to 100% of the workflows are done in Excel, in spreadsheets, which really outlines just how deeply rooted I think this problem is, and for MGAs that are looking to scale, something that can be moved away from. And how do we think that can be done? Well, having looked at those challenges, what good looks like, we think, is actually quite a structured approach. It's not about fixing one thing in isolation. We actually think it's about building up a joint financial operating model. And in the top left there, we think it really starts with a robust financial setup. Now, at the foundation, you need a stable and frequent connection between not only your policy systems or underwriting workbenches, but with your banking systems and your accounting systems. And when those systems are properly in sync, and you're working with daily data feeds rather than, and something that we see quite often is periodic data extracts, where at the end of the month you'll just have a data dump of everything that happened during that period. But when you do have that real-time or daily data feed, you move from lacking visibility to something that is much closer to real-time. This is going to give you far better insight into changes in premiums, such as those MTAs. It's also going to surface things like bank fees and transactional level details that on the reports that you typically get day to day are hidden, and they're actually underneath the surface. But when you look at those robust tech-enabled integrations, some of those things such as bank fees and charges start to become surface to you. Now, once the foundation is in place, I think you can then move into that data and reconciliation automation piece. And instead of reconciliation being a month-end exercise, it actually becomes something that happens daily. It's almost a continuous exercise. Once things come in, the automation takes place and that reconciliation is handled. Those routine matches should be handled automatically, we think, and you can use clear rules, things like the amount, the currency, a date, maybe some sort of reference combination. And as a result, that reference or that reconciliation, moves into a controlled and repeatable process. It also then reduces the amount of time you're actually spending on manual cases, and only genuine exceptions are being picked up by your team. Now, naturally over time, what we start to see is that process stabilize, and it then naturally enables you to have stronger reporting and stronger insights into the data. With clean, structured data flowing through your systems, you're going to gain that real-time visibility into not only your financial positions, but also accurate debtor management, for example. And while month end is always going to matter, it is at the moment just a bit of a scramble at the end of the month to ensure that everything is in order. But what it really turns into is more of a validation step. And this is going to give your team more confidence in the work they're doing and the workload that they have. But it's also going to allow you to effectively close the period before moving into the next period. Now, outside of your internal teams and your executive teams, it's also going to give your partners, be that on the distribution side or the insurance side, greater confidence with the amounts and the data that you're giving them, which I think is underlooked in just how important the reputation is for an MGA. Now, with that level of visibility, with that level of control, you can then look to improve the payment efficiency and security. So we know within insurance, it's not just the receivables and the reconciliation. You then also have to remit it out the other side, and those commissions, those fees, net settlements, tax amounts, they should really be calculated automatically based on the contractual rules that are within the binders. And while payments are then orchestrated through defined approval workflows, you're going to lead to less errors, less duplicated payments, with clearer governance in terms of what's being paid and why is it being paid. And all of this will ensure that the actual payments are moving quicker through the organization as well. And we've touched on it a few times, and we think it is just so important for MGAs is that this all links directly into the controls and compliance disciplines. Yeah, we think every action should be recorded, every decision should be traceable, especially in areas such as credit control, as Piers mentioned, where write-offs are taking place, where you're handling exceptions. That needs to be fully evidenced so that when auditors do come onto the platform, you're able to provide them with detail as to why things happened, and what action was taken in order to ensure that a minimal amount of money is written off. The last one then is really on scalability and operational resilience. And once you do have these sort of best practice frameworks or guardrails in place, you then have a platform which is going to allow you to scale, and it's going to allow you to scale with resilience. Your workflows should really become configurable rather than fixed. And what we mean here is that you should be able to onboard new insurers, you should be able to bring on new broking partners and also new products without completely redefining your internal processes. And also that should link into the point that insurance is an intrinsically complex industry. There are payment flows that are unique to insurance, and you should have a model that can support that and can support growth of bringing new specialized products on without introducing things like additional risk, manual effort, or dramatically having to increase your headcount as you experience those premiums go up. So again, much like the challenges, we don't see them being siloed. We actually see them being layers that, as you look to build on 1 through to 6, you're going to move from connectivity to automation to insight to control, and that's going to finally allow you to scale. And we think that's really what brings it all together. But as we mentioned at the start of the presentation, we do want to share some insights, some things that we've seen from the market, from some highly automated MGAs. And I know, Piers, you've got a couple of some case studies that you'd like to share.
Absolutely. And what we've just pulled here is an example of a case study that's available on the Diesta website. So please do go and have a look in your own time. But is an example of an MGA that really transformed the end-to-end way in which they processed premium payments. And the first stat you'll see there is perhaps one I think is most impressive. They automated 90% of their reconciliations. Now that was across both broker distribution, payment provider distribution, and that's no mean feat, particularly across that broker distribution. So again, removing 90% of the workload. They then therefore also eliminated any manual intervention when it came to the accounting and ultimately the processing of that payout to themselves in the form of commission and to their carrier partners for the premium and tax splits. So that's a really, really big reduction. The time it took them to move cash end to end, they reduced that workload by 90% by getting that front end piece right, and then streamlining that journey from there on out. They also had a complex multi-entity, multi-geography structure, and were able to get much better reporting across the performance financially of those different organizations. And that was real time and very easy to access. And that also gave them, again, going back to some of those core things, that visibility of their debtors, their creditors, what is their cash position that they're holding, feeding into those key financial and accounting processes that an MGA has. Also, the way that they were able to demonstrate their processes, their procedures, and their audit trail behind their processes really improved their compliance posture for both their auditors and any regulatory obligations that they had. Overall, that enabled them to reduce the time it took them to process premium by 50%. So it took them 50% less time to do the same job. And if we bear in mind that we remove 90% of the workload, the 10% workload that was left over, using a platform that provided advanced tooling, enabled the workers to be 3 times or over 3 times more effective and efficient when it came to managing those payments that did need some investigation, they did need some processing. So that is a really transformational story that enabled that organization, if we look back to the big picture, to move money within the insurance industry 50% more quickly and move money within their organization over 90% more effectively. All while getting easy to access reporting and making sure those control and governance points are well embedded and well documented within their organization. Again, if you'd be interested in understanding more about this, we'd be happy to discuss with you as a follow-up. And I'm going to hand over to Toby now to circle back round on some of those original points.
Perfect. Yeah, absolutely. As sort of mentioned at the start of the session, wanted to earmark 10-15 minutes for Q&A at the end and some conversation, but yeah, just to spend a couple of moments on what we think are those key practice frameworks, but also what we've got to address during the session is firstly the core financial responsibilities, as Piers mentioned, so those 4 operational ones really being underpinned then by that compliance and auditability that should just happen naturally, we think, within an MGA. We then also looked at those common finance and payment challenges, so not things that are anomalies or things that we've heard once at a conference, but actually things that come up time and time again when we do speak with our clients and partners. Taking those challenges, it's absolutely not something that is sort of the be all and end all. We do see there being solutions in place, and we do see some key practices that you can implement and embed into your organization to be more efficient, to be more scalable, and to give you the best chance of going the distance. And we've hoped to bring those to light with you there. And then also just a few of those insights from MGAs that have already made that step to be more automated and to be more streamlined. I suppose the summary from all of those really is that inefficiency piece can be addressed by building that secure and financial foundation, really there based on timely receivables. So ensuring that you've got visibility of those premiums, you've got visibility of those receipts as and when they come in, and then having a really slick reconciliation process that becomes discipline and actually becomes day-to-day operations rather than a month-end exercise when it absolutely needs to be done. So the second point then I suppose is really where we see a non-scaling system, and those integrations need to be robust with the source systems, your underwriting workbenches, with your bank accounts, your payment providers, but also ensuring that insurance documentation that is so vastly different is able to be mapped into a common structure, and all of that coupled together is supported by automation that is going to reduce the time that your team spend handling those manual cases and actually just spend time on genuine exceptions or chasing funds that are outstanding. And finally, I think probably the most important is the element of trust. Insurance is an industry that's built on trust. It's one of the core pillars of it. And ultimately, if you're not being accurate or trustworthy with your distributing partners or with your insurance partners, it's going to be damaging not only for your reputation, but I think also for the business that you can get hold of, and also the longevity of the business that you hold, say, with that carrier partner. And all of this can really be improved through that access to real-time reporting, alongside those controlled and secure payment executions that ensure that the right amount's being paid, that you're paying it in a timely manner, and that you're not experiencing any embarrassment when it comes to being asked, what is this payment for? Why have we received this payment? Or quite simply, it's just the wrong amount. Perfect. So I hope that was an insightful session. I hope some of the challenges resonated perhaps with you, maybe not in a sense that it's too damaging, but you can maybe see there is some light, and that the frameworks can potentially be applied to your business in some way. But we'd love to spend the last 10 minutes or so opening up to the floor. Manveen, Piers, if there are any questions during the session.
I don't think we've had any yet, but let's give let's give the audience a couple of minutes to maybe formulate some questions and share them with us.
Should anyone want to raise their hand instead, but you do have the chat box available, so feel free to pop your questions in. I'll just see if anything comes through, or see if anyone's typing.
And I think also, if there was a question perhaps, but wanted to discuss that in maybe a slightly less public forum, we'd obviously be happy. If anyone wanted to reach out to us via the Diesta website or via the information that we've got on our MGAA page, we would be delighted to have that as a follow-up question and answer.
Doesn't look like we've had any questions come through. I mean, very thorough session. You went through everything in quite a bit of detail. So I suspect there's a lot of people thinking and probably formulating questions in the background. If anyone does want to reach out to Toby, Piers and Julian, please do. Otherwise, I think we'll probably wrap up there unless any questions sneak through in the last minute. I'm just also, before we do wrap up, then just going to share a link. As always, we appreciate your feedback on these sessions, so please do just take a moment to provide your feedback. It's always useful for us just to know what we can continue doing in terms of sharing content, and feel free to reach out to myself if you'd like me to make introductions to Piers, Toby and Julian at Diesta. But no, I think very, very thorough sessions. I think you've probably out-questioned everyone in that regard, but we'll wrap up there. Otherwise, unless there's anything else for you to add there, Toby, Piers and Julian?
No, other than Manveen, thanks for all of your support, getting everything set up. Thanks to everyone for joining,
Yes.
and come and say hello at the next MGAA conference or industry event. Look forward to meeting you in person, hopefully.
That's it, yep. And echo those thoughts. Thank you for Diesta for giving up their time, and thank you all for joining us today. Enjoy the rest of your afternoon. But there we go. Thanks to you as well from the audience.
So much. Cheers. Bye bye.
Thank you.
Thank
you
you.
all.
Thank you.
Bye bye.